they're still in a difficult place without a shadow of a doubt. If you look at the numbers that we've got for the holiday spending, we don't get much data on January because they aggregate everything. So that makes things a little bit complicated at the beginning of the year. Um, but I think there's two aspects to it. One, the stimulus that they put in place has got some traction, but whether it actually boosts oil demand is very doubtful. But that's a structural change in to a large extent. What one really needs to have a look at is things like passenger vehicle miles, because there are so many electric vehicles now, and the same goes for truck miles. You now have to look at those numbers to get a better idea of what the economy is doing than the oil numbers. We're already getting reports today that Chinese refiners are slashing run rates because they can't get access to the cheap Russian oil anymore, because of the tightening of the sanctions under former President Biden. So it's one of those pictures. China is not one of, we're not going to see the sort of increase in demand that one had hoped for over the long run. China's going to continue to build and build and build. On the other hand, I don't think it's going to tail away. The economy itself is basically it's not doing too badly, but it's coming at a fairly large cost in terms of fiscal stimulus, which isn't getting the sort of traction that perhaps people hoped. But on the other hand, what was the intention in the first place? My own guess on China is that the authorities there basically just wanted to stop the rot and get things to stabilize.